Well, we can talk now to the chief executive of Sainsbury. Well, Justin King stepped into the role in 2004. Before that, he was director of food at M&S with around 16% of Britain's food retailing market. He heads up the UK's third largest grocer. And Justin King joins us now from the London Stock Exchange. Thank you so much for joining us.
Good morning.
In terms of your like-for-like sales, good morning to you. They've increased some 4.7%. How much does that actually have to do with volumes, and how much does it actually have to do with inflation?
Well, our like-for-like are up about 4.2% actually, and most of that's fuel. Our underlying like-for-like, so for our grocery business, is up 1%. And of course, with inflation running at 2%, you can see quite clearly that customers are really reining in their spending. But we're pleased nonetheless with that performance because it's a good beat to our competition and continuing to show that the Sainsbury's offer is helping customers in these tough, challenging times.
But so if you actually strip out inflation, how much did your volumes grow in terms of sales?
Well, I think that's a difficult question to answer directly, because what happens, and we've talked about this before, is that when customers' budgets are under the pressure they are at the moment, they buy different things. So, of course, if customers were buying exactly the same thing today that they were a year ago, and our sales are up 1%, then, of course, our volumes would be down 1%. But what we're seeing is customers buying different things. They're buying more fresh food, they're cooking it for themselves. Of course, that's something we're encouraging. Sainsbury's have always been at the forefront of encouraging customers to cook. Our most successful promotion in the last quarter, for example, was an offer that showed customers how to cook 5 meals for a family of 4 for £20. So I think you have to be careful looking at the direct translation of volume, but nonetheless I think it's very clear that customers are spending wisely, they're spending carefully, and you're seeing that reflected in lower levels of growth.
But overall, is it more difficult now on the high street than it was just 4 months ago?
Oh, definitely so, yes. I think we saw at Christmas, as indeed we always do, somewhat of a splash out by customers, but the January rein-in of their spending has continued through the quarter. You see that reflected in our figures. As I mentioned earlier, these figures represent us still beating the market, and so you can see the market since Christmas has been very subdued in the level of growth in it. And as far as we can see, there's no reason to change our view looking forward. The customer has no good reason, notwithstanding what they might hear in the budget today, to believe things are going to get much better. And the kind of careful spending we're seeing, the savvy shopping that we've talked about in the past, we expect to stick with us for a while yet.
Justin King, how concerned are you actually about the budget cuts that we're going to hear about today? And also, how concerned are you about the effect that a possible interest rate hike will have on your consumers?
Well, I think the first thing to say is consumers, for a good while now, have been very realistic in their outlook. They know that cuts are coming. They know that taxes are going to rise. And I think the spending patterns that we've seen since Christmas reflect that expectation. So I think I'd turn the question around the other way. What the customer will be looking at today in the budget is for any signs of good news, any sense that the cuts have gone as far as they need to, any sense that the tax rises will stop, actually will be viewed, I think, positively by customers. And so it's that way round, I think. They'll be looking to see if there are signs that the Chancellor is able to give optimism in the future.
But you were talking before about promotions. What kind of level are you giving in terms of promotions? Are they at a record high? You have to compete, of course, in a very tough environment with certain rivals going full front for the 10% cheaper campaign.
Yeah, well, promotions have been at an all-time high for a year or so now. During the quarter, they've been about the same as they were through most of last year, the high 30s%, just a little bit short of 40. Of course, at Sainsbury's, we do promote a little bit less than our grocery competitors because we're able to offer customers value different ways. We have, of course, our Nectar scheme. It's the biggest loyalty scheme in the UK. Our customers love that. And we're able to give them vouchers at the till. Uniquely in Sainsbury's, we have our coupon at till scheme, and we're issuing record numbers of those vouchers. The reason customers love them, it's dead simple. They're vouchers for things that they want to buy, so it's money they can really save when they use those vouchers.
So you're not actually tempted to do a similar campaign to Asda and Tesco with the 10% cheaper? Is it that kind of market that you want to go after as well?
Well, it's always been a price-competitive market. You're just referring to the current marketing campaigns of our competitors. People will always find different ways of telling their customers that they're better value for money. We've been very successful with a combination of very sharp underlying prices, a promotional campaign which is competitive with our rivals, but also with the extra that we're able to offer through Nectar and Coupon at Till, and offering our customers value for money that persuades them that Sainsbury's is the place they should do their weekly shop.
Justin King, thank you so much, the Chief Executive there of Sainsbury. Real pleasure to speak to you this morning.
Thank you.